Welcome back to the deep dive. We're here to give you the insights you need, cutting through all the noise out there. Today, we're diving into something pretty fascinating, I think, a real dream destination for many. Real estate investment in Phuket. And just quickly, let's nail the pronunciation right away. It's Phuket, okay? Not Phuket. Phuket. So our mission today, it's really to equip you with the solid info you need to understand the legal side, the money side, and the best spots if you're a foreigner looking at rental properties there. We're really focusing on decoding the rental laws for foreigners, and for this, our source is it's an excellent in-depth guide from Ocean Worldwide. Now, these guys aren't newcomers. Ocean Worldwide is a luxury real estate agency. They've been based right there in Phuket since 2004, and they really specialize, focusing squarely on luxury residential real estate, Phuket, and also Koh Samui. Their director, Sandra O'Neill, she's apparently helped literally thousands of families and investors over the years, so they really know their stuff.
Absolutely. And knowing these specifics, I mean, it's just crucial. Phuket offers fantastic opportunities, no doubt about it. But like any foreign market, if you're not properly informed, there are definitely pitfalls you can stumble into. So yeah, understanding this stuff up front helps you build a smart strategy, avoid those costly mistakes.
Okay, right. Let's unpack this then. The absolute first hurdle, the thing anyone looking at Phuket from overseas needs to get their head around: property ownership laws. What are the basics? How does it work for a foreigner?
Well, it's interesting because Thailand has effectively two different tracks for foreign ownership. This comes from their Condominium Act and then the general laws about land. So track one, condominiums. The guide makes it clear foreigners can buy and own a condo unit directly in your own name. There's a key condition, though. The total foreign ownership in any single condo building can't go over 49%.
Ah, okay, so there's a limit.
Exactly. A 49% quota for foreign buyers in any given building. This means, finding units available under this quota can sometimes be competitive. You need good intel, maybe act fast, because those spots often get snapped up.
Right, so that's condos. What about houses, villas, land?
Okay, that's track two, and it's completely different. Foreigners are not allowed to own land or therefore houses directly in their own name, period.
Can't own land. Okay.
But what you can do is lease the land. Typically, it's a long-term lease. The maximum initial term is 30 years. And usually there's an option baked in to renew that lease for another 30 years.
So a 30 plus 30-year lease.
Exactly. You own the building, the structure itself that sits on the land, but the land underneath, you're leasing that long-term. Think of it like a very, very long rental agreement for the ground, one you can probably renew. It's a fundamental difference from owning a condo freehold.
Yeah, that distinction feels really critical. Owning the condo unit itself versus leasing the land a house sits on. Here's where it gets really interesting. This distinction is fundamental. How does that difference, play out practically for an investor? Does it change how you'd value it or what you look for?
Oh, absolutely. It changes the game for valuation, for risk assessment, everything. With a condo, you get what's called a freehold title. That gives a sense of permanence. It's easier to sell and transfer. With the land lease for a house, your ownership of the actual building is tied to how long that lease runs. Now, renewals are common, as I said, but it's still an extra step. It adds a layer of, let's say, admin, and means your very long-term planning depends on those lease terms and renewals. So yeah, different property types might lead you to different long-term strategies.
Makes sense. Okay, so we've covered getting the property. Let's pivot to actually renting it out, making it work as an investment. You've got your condo or your leased land villa in Phuket. What are the rules then? What do you need to do if you plan to rent it out?
All right, this is super important according to the source. There's a key requirement. You absolutely must register your rental property with the local authorities. They call it the 30-day notification. And get this, you have to do it every single time you get a new tenant.
Wow, okay. Every changeover.
Every single time the property is rented to someone new or there's a tenant change. It's how the local government keeps track of who's living where in rental properties.
Yeah.
It's about transparency, compliance, and, well, if you don't do it, you could face fines, maybe other legal hassles. It's an ongoing task you need to manage.
Okay, noted. What else? Contracts, I assume.
Definitely. A written rental contract is essential. And crucially, it must be in the Thai language.
In Thai.
And signed by both you, the landlord, and the tenant. It needs to cover all the key details: how long the lease is for, the rent amount, any extra fees or charges, security deposit, all that. And the Ocean Worldwide Guide really stresses this point. Get legal advice when you draft that contract. Make sure it's fully compliant with Thai law, and just as importantly, that it properly protects your interests as the owner.
That legal advice point keeps coming up. It sounds like more than just a casual suggestion. This raises an important question. Why is that legal advice so absolutely crucial for someone navigating these waters? What are the real risks of not getting it?
It's crucial simply because Thai law has its own specific way of doing things, its own nuances, and these can be really quite different from what you might be used to back home. Without good local legal advice, someone who truly gets the practical application, not just a word-for-word translation, you could easily accidentally put clauses in your contract that aren't actually enforceable in Thailand. Or maybe you leave out protections that are standard practice there that could lead straight to disputes, maybe financial loss, or just failing to comply, which puts your whole investment at risk. So yeah, proper legal counsel really just minimizes your risk. It's foundational for long-term success.
Got it. Okay, let's talk money. The bottom line for any investor. Beyond the rules for owning and renting, what about the ongoing financial stuff? Taxes, fees. What should you be prepared for when renting out your Phuket place?
Right, the financials. Okay, first up is personal income tax. If you're a foreigner earning rental income in Thailand, that income is subject to Thai personal income tax. And the system they use is progressive. It starts at 5% and goes up to 35%, depending on how much rental income you earn in total.
Progressive. So the more you earn, the higher the rate on that extra income.
Exactly. Think of it like income brackets or steps on a ladder. Each step up, the tax rate on the income in that higher bracket increases. So while pulling in high rent sounds great, this progressive tax means you really need to focus on your net income after tax. It might even influence your strategy, maybe looking at properties that offer solid, but not necessarily the absolute highest gross yields to stay in a more favorable tax position, or perhaps exploring tax-efficient ownership structures if possible. It adds a layer of calculation.
Okay, income tax. What else? Property taxes.
Yep. There's a local property tax. It's calculated based on the official assessed value of your property, and you pay it annually. The good news here, according to the guide, is that this tax is generally considered relatively low compared to what you might pay in many other countries. So that's a plus.
Relatively low property tax. Okay.
And then one more thing to factor in, service fees. If you use a property management company, which, let's be honest, many foreign owners do because it's just easier.
Yeah, managing from overseas sounds tough.
Exactly. So those management companies will charge fees for finding tenants, collecting rent, maintenance, handling that 30-day notification we talked about. You need to account for those fees when you're setting your rental price to make sure you're still profitable. Don't want any surprises there.
That's a fair bit to juggle. So looking at that whole financial picture, the progressive income tax, the lowish property tax, plus management fees, what stands out to you here when thinking about the overall financial picture of a Phuket rental? What's the main takeaway for someone trying to figure out if it adds up?
I think what really stands out is just how vital it is to do your homework up front. Build a detailed financial model before you even think about buying. Yes, the property tax might be low, but that progressive income tax, especially if you're aiming for high rental income, can take a real bite out of your profit. So it's not just about chasing the highest rent. It's about truly understanding your net return after all these costs are deducted. It really hammers home the need for thorough, due diligent, realistic income projections versus these very specific Thai costs to make sure the investment actually meets your financial goals.
Absolutely. Due diligence is key. Now, let's get specific about location. The Ocean Worldwide article, our main source here, it really zooms in on a few particular areas in Phuket, calls them the best for investment. Let's explore why they single out Bangtao, Cherngtalay, and Surin. What makes these spots so special?
Well, the guide suggests these three areas, Bangtao, Cherngtalay, and Surin, offer this kind of perfect blend. They mix tranquility, luxury, and convenience. And that combination apparently makes them really popular, highly sought after by both high-end tourists and people looking to live there longer term.
Okay, a blend. Let's break them down. What's the vibe in Bangtao?
Bangtao is probably best known for Bangtao Beach itself. Huge stretch of white sand, clear water, really beautiful. The area is packed with luxurious resorts, lots of high-end restaurants, and it also has quite a vibrant nightlife scene. So it's definitely a major tourist hotspot, attracting visitors who want that upscale, lively vacation experience. Big rental potential there, obviously.
Okay, lively and upscale. What about Cherngtalay? How does that differ?
Cherngtalay offers something a bit more laid back, apparently, a more relaxed atmosphere.
Right.
It's described as having a nice mix. You've got local markets alongside boutique shops and still plenty of upscale restaurants. So it seems to appeal more to those who want quality and amenities, but maybe prefer a slightly quieter base, perhaps a bit more integrated with local life.
Interesting. And the third one, Surin. That name sounds familiar.
Yes, Surin. It's often nicknamed Millionaire's Row. That probably tells you a lot.
Millionaires row. Okay.
Yeah. It's where you find some of the most exclusive, most luxurious properties in all of Phuket. Think stunning villas with amazing sea views. So naturally, it's a prime spot if you're targeting the very top end of the rental market. Attracts a really discerning clientele looking for privacy, exclusivity, and just, well, unparalleled luxury.
So if we connect this to the bigger picture, it sounds like between just those three areas, you've got quite a spectrum of luxury experiences for potential renters. You've got the buzzing, high-energy luxury in Bangtao, the more chilled boutique luxury in Cherngtalay, and then the super exclusive top-tier luxury in Surin. Seems like a smart way to target different segments of the market.
Exactly. It shows there's diversity even within the luxury segment in Phuket.
Yeah.
Depending on your investment goals and budget, you could potentially target any of those niches.
Right. So let's start wrapping this up. We've covered a lot of ground today. The main takeaway seems clear. Investing in rental property in Phuket. It can definitely be a great opportunity for foreigners, lucrative even, and it's a big but, you absolutely have to get your head around the specific rental laws, the regulations, the taxes. Understanding that intricate local system is just crucial for success. It's not just about picking a pretty spot.
Couldn't agree more. To just quickly recap the absolute must-dos for you, the listener. First, follow all the legal steps for ownership correctly, whether it's the condo route or the land lease route. Second, make sure you do that property registration, the 30-day notification, every single time. Don't let that slip. And third, really get to grips with the money side, the progressive income tax, the local property tax, any management fees. Know your numbers inside out. Being proactive on these points is probably your best protection.
And it's clear that resources like the guide from Ocean Worldwide are incredibly valuable here. They offer that practical, on-the-ground insight that you just can't get from, a generic travel website. They live and breathe that market. So here's a final thought to leave you with. What does all this mean for you personally? Really consider how digging deep into these local specifics, understanding the rules, the taxes, the neighborhood nuances, far beyond just thinking, oh, Phuket is beautiful. How that deep understanding can genuinely shift your approach. It can transform what might feel like a speculative gamble into a really well-informed strategic investment. It lets you aim for your piece of paradise, but with your eyes wide open and, hopefully, with a lot more confidence.